Hello, Patrick Walchuk here, and as we do every month, we're going to take a multi-unit building, multi-unit residential building that's sold in Ottawa. In this case here, it was in February of 2026, and we'll do a financial analysis on the building for you. And if you enjoy getting these videos, hit the subscription button, notification bell, and we'll get them sent out to you every month. So let's take a look at a triplex that's sold in the west end of Ottawa. Again, that happened in February, and from what I'm able to tell, it was a legal triplex. I don't know if it was fire retrofit or not. That wasn't stated. So it was listed for $1,080,000 and it sold for $1 million. And that's kind of bang on for what I would expect. You know, basically $330,000 to $350,000 per door. So it had a scheduled rental income of $74,000. When we deduct 3% for vacancy and bad debt, it gives us an ERI, or an effective rental income, of $72,000. The operating expenses, as stated in MLS, are about $14,500. When we add in 5% for maintenance, 5% for management, that gives us total operating expenses of $21,600 and a net operating income of $50,000. So when we translate that into some other metrics, what it gives us is a cap rate of 5%. I'm a little bit surprised. I would have thought maybe it would be a tad higher, but it is what it is. The operating expense ratio is pretty good, actually, at 30%. It sold for 14 times the gross and 20 times the net, which is, you know, average kind of thing. Now, in order to be cash flow positive, we look at what's the minimum down payment that a buyer could purchase this property for and still make a little bit of money, or at least not lose money in year one. In this case here, it's a 30% down payment, which equates to $300,000. So if we got a mortgage of 4%, the monthly mortgage cost is that, blah, blah, blah. So that translates to an annual mortgage payment, or an annual debt service, of $49,000 and change. And that gives the purchaser a positive cash flow of almost $800. Cash flow of $800,000, that would be sweet. And that's an ROI of basically 0.27%. So that's how that building shook out. All very normal, quite frankly. Thank you for watching.